What's up, everybody? I am Jaspreet Singh from theminorityMindset.com, where money minds rethink rich. Being financially free or wealthy means you have enough cash flow coming in from your investments and assets to cover your daily expenses. Now, the problem with that is when most people talk about creating this cash flow, they say one of two things. Either you got to go out and just buy some cash flow producing real estate, or you got to buy stocks that pay dividends. The problem is, what happens if all of your tenants stop paying rent? What if the government introduces some new moratorium so now your tenants don't have to pay you rent? Or what happens if the stock market crashes and companies slash their dividends and you were relying on this one stream of income? This is why you need to know how to invest your money. Nobody can predict the future. Nobody knows what's going to happen tomorrow. But what you need to do is be financially educated and prepare for anything. I love real estate, and I also love stocks. But I also know that nothing can go straight up forever, and every asset class goes through their own cycles. Sometimes real estate is going to be producing cash flow and make profits hand over fist. Sometimes it's going to be the stock market. Sometimes it's going to be other places. So what you need to do is, instead of trying to guess what is the best thing to do, you need to be the person that's financially educated and can win in any economic situation. So let's jump into number one. But before we do that, I need you to do me a quick favor and smash the thumbs up button below. The first investment you need to make is in real estate, but not just any real estate. Cash flow producing real estate. This is not the home that you live in, and this is not a home that you're going to flip. Because when most people talk about making money in real estate, they assume that you have to buy a home like this, and let's just assume that you buy this home for $150,000. And now the way that you make money, people assume, is you have to hope that you can sell this property for $250,000 so you can walk away with your $100,000 check. Now, this is great. If you get this type of appreciation, that's fine, but I want you to get paid while you wait. So what I want you to do when we talk about owning real estate, and more specifically cash flow producing real estate, what you need to do is you want to buy this property, something like this, for $150,000. And now what you want to do is, instead of just trying to sell it for $250,000, you want to take this property, rent it out to somebody else for $1,500 a month. So you move in a family who is going to live here, and in exchange for them living in this asset that you own, in exchange for you giving them this value, which is the home, they're going to pay you $1,500 a month. Now, I know some of you might be thinking, $150,000 for a home? Where in the world am I going to find a $150,000 home? Well, if you look outside of your city, and maybe if you look outside of your state, you will be able to buy a home for $150,000, even in today's market, that you can rent out for $1,500 a month. I have done this many times. So this is very possible, and now you will have a tenant that's living in this property that's not only paying for your home, they can help you pay for your mortgage, they can pay for your taxes, they'll pay for all your expenses, and it'll put some money in your pocket every single month. Now, real estate investing isn't easy. Every real estate investor has to go through hurdles. Every real estate investor has to go through roadblocks. There is a learning curve that you have to go over, and it's tough because now you got to know the real estate agents, you got to know the contractors, you need to know the attorneys, you need to know the building inspectors, you need to know the city officials. So there's a lot of people that you have to meet, and there is a learning curve that you have to go through. But once you go through the learning curve, real estate investing can become much more passive. I own quite a few real estate properties, and I don't manage any of my real estate. I don't know who my tenants are. I have a property management company that manages my properties, and they make sure the tenants pay, they make sure all the bills are paid, and they're the ones that put the checks into my bank account every single month. Real estate is my favorite place to invest because when you invest in real estate, you can produce consistent and predictable cash flow, and you get tax breaks. Real estate offers some of the biggest and best tax breaks that our tax code has to offer. The reason why I know that is because I am a licensed attorney, and although I am a licensed attorney, I'm not your attorney. So if you have specific tax questions, talk to a professional in your area. But real estate investors get huge tax breaks, which allow you to now make this money. At the end of the year, you could have $10,000 worth of profit in your bank account, but because you made this money from your real estate investments, from this type of passive income, you can tell the government, hey, yeah, I made $10,000 worth of profits, but I'm only going to pay you taxes on $5,000 worth of income. So you show the government, hey, I made $10,000 of profit, but I only have $5,000 worth of taxable income. So you're only paying taxes on $5,000, and all the extra money is yours. So you get to pay less in taxes, you get to produce this consistent cash flow that is predictable, and your money is hopefully in an appreciating asset. If you're buying real estate in a place that's growing with more businesses coming in, well, now the value of your real estate is going to go up too, and now you own the asset. wait. So as property values go up, so do rental values. Now you're getting paid while you wait. Instead of just waiting for your property to go up in value from $150,000 to $250,000, you get a $1,500 check every single month, and as property values go up, your rental values will go up too. And so now you're getting paid while you wait. The first property that I ever bought wasn't a home that I lived in myself. It was a small 1,000 square foot condo that I rented out. It was a rental property. I leased it out for $600 a month, and after going through my learning curve, this property started paying me somewhere between $250 and $350 a month in profit, and this was completely passive because I handed over the keys to a property management company and they did all the work. Now, I had to go through a learning curve. The beginning part was not easy. I was spending a lot of time meeting people, learning how the process works, on the phone, even with tenants, trying to figure out how this whole real estate investing thing worked. But once I got the hang of it, now this is putting $250 to $350 in my pocket every single month, and I still own that condo today, and today it's leased for $850 a month. This is why real estate is my favorite place to invest, because now you can stack this income. You can stack the cash flow. So now I started thinking, if every property that I own, every unit, pays me $250 a month in profit, then what I need to do is I need to figure out how I can acquire 10 units so I can have $2,500 a month coming into my pocket. And if I can get 100 units, that's $25,000 a month of consistent passive cash flow coming into my pocket every single month. And if I'm thinking even bigger, if I can go out and buy 1,000 units, that means I'm going to be making something around $250,000 a month in consistent passive cash flow. And this $250,000 a month I can keep in my pocket. I don't got to pay the same taxes that a doctor would on this $250,000, because now I'm making my money from my investments, so I get new deductions, I get new tax breaks that people who are earning their money from their job don't. This is why real estate is so powerful, because not only do you get this cash flow, you get tax breaks, and you can get this appreciation, which is completely passive on your side if you know how to invest your money for the long term. Does this mean that real estate is completely risk-free? No. You saw what happened in 2008 when people who were highly leveraged, who didn't know what they were doing, got burned by the system. This is why you want to be a smart real estate investor and manage your properties smartly and buy properties that are producing positive cash flow, that are paying you to own them. What happened before the 2008 crash was people were buying properties where now they rent the property out and they would be losing money every single month, because the hope was in 2 or 3 years you'll be able to raise rents, and now when you raise rents you will finally be profitable. So people were buying losing investment properties on the hopes that rental rates would rise fast enough over the years that way eventually this property would be profitable, and even if it wasn't, property values were skyrocketing, so you can just cash out, refinance, and pull some of your equity out of the deal. Well, you know how that story ended. That whole bubble burst. So you want to be a smart real estate investor, own properties with equity in the deal, and buy properties that are producing positive cash flow. I'm looking for a minimum 7% cash on cash return on my money, meaning for every $100,000 I invest, or for every dollar I invest, I want to get 7% back every single year. So if I invest $100,000, I better be making $7,000 in cash flow a year. If I invest $1, I better be making 7 cents a year in positive cash flow. The second investment that you need to make if you never want to have to worry about going to work again is you need to own a cash flow producing business. Everybody, if you want to become wealthy, needs to own a business. Now, listen to what I said very carefully. If you live in a first world country and you want to become wealthy, you need to own a business. But that doesn't mean that you need to start a business, and that doesn't mean that you should be operating a business. Actually, most people should not be starting a business, and most people should not be operating businesses. They don't have it in them to run or operate or start a business. But what everybody can do is own a business. The way our tax system and our society works, you get benefited if you own the business, and you get punished if you work for the business. So what you need to do is you need to own a business. That doesn't mean that you shouldn't have a job. Most people should be working. Most people should not be running their own business because they don't have the skill, they don't have the expertise, they don't have the drive necessary and the risk tolerance to run and operate their own business. But even if you don't have that, you can still own a business that's producing cash flow and be the owner of the business. That way you get the benefits of owning the business without having to run it. Now, there's 2 reasons why you want to own these type of businesses. The first reason is for the income, or we'll call it the cash flow in this case. And the second reason are the tax benefits. And depending on the strategy that you have to own these businesses, you can get one, the other, or both of them. The way most people's finances look is you go to work, you get paid, and then you pay taxes, and then you got to spend whatever's left on your vacation, vacations, on your car, on your home, and everything in between. But if you have a business, you can kind of flip things around, because now you can spend money using pre-tax dollars as long as it's for the business, and then you only got to pay taxes on whatever's left. Recently, I was just in Chicago, and now I got to go to Arizona and Austin, Texas, and I had to go for business, but they also were kind of like vacations, because now I got to go see Chicago, I'm going to go see Arizona, and I get to go see Austin, Texas. But I get to go there using pre-tax dollars because I got to go for the business, and I get to go there and eat at nice restaurants, which are business meetings, which are, again, pre-tax dollars. And now I get to take this money and tell the government, hey, I made this much money, but I had to go to Chicago, I had to go to Arizona, I had to go to Austin, I had to eat in these places, I had to have a hotel in these places, and now with whatever money's left, that's the money I pay taxes on. For most people, it's flipped. You make money, you pay taxes, and then you would have to find the cash to go to Chicago or Arizona or Austin. And so when we talk about the tax benefits of owning a business, now the benefits that you're getting is you get to spend money using pre-tax dollars, and then you only have to pay taxes on whatever's left. So you want to spend as much of that pre-tax dollars as possible, assuming it's for real business needs, but you have the benefit now and the ability to spend money before you pay taxes. You don't have that option if you're an employee. Second, on the cash flow side, if you own an established business that's profitable, well, now if you own a piece of it, you will get your share of the profits every single year. So now you get your piece of the profits, and you're doing this as the owner of the business rather than the operator of the business. That's why it's important not just for you to work in a business, but for you to know how to own a business. And there's a few ways that you can do that. You can go out and buy a physical business. There's a ton of websites online which show you businesses that are for sale. The key here is you want to make sure you're buying a business that doesn't require you to operate the business. You want to own a business that you can hire someone else to operate it for you. You can buy something like a hotel, or you can buy a franchise. Remember, you want to own a cash flow producing business that doesn't require you to work in the business every single day. You probably will have to spend some time managing the business, making sure that the business is running, but you don't want to be the person standing behind the cashier every single day. You want to own a business that's producing cash flow that you don't have to work at every single day. The alternative to owning the entire business is to own a partial ownership share in a business. So this could mean that you and a few friends are going to go out and buy a business, or you could go out on the stock market and buy shares of a cash flow producing business. That means a business that is profitable. We'll talk more about growth companies a little bit, but this is something that's a little bit more stable. You're not going to get the same tax benefits if you just own stock in the company as if you would if you owned the physical business, but you still do get other tax benefits from the money that you make in the stock market, because the money that you make in the stock market is taxed at a lower rate than the money you make from your job. The whole idea here is you want to invest into the companies that are producing value, that are generating cash flow. So you want to own a piece of the companies, or you want to own the company that's making this money. That way when these companies make money, so do you. The key here is you don't want to be the person operating the business, you want to be the person owning the business.